In this video, I'm going to go through preparing an unadjusted trial balance and then recording our adjusting entries. So what we've done is recorded the entries in the journal. We've been posting them to the ledger, updating our balances, and now we're at the point where we're going to prepare an unadjusted trial balance. It's a list of all of our accounts and their unadjusted balance. So I'm going to link each one of these unadjusted balances, and you can see here I'm picking up, these are all normal balances of debits. Assets go up with debits, with the exception of, I'll show you here in a second, with the exception of the accumulated depreciation. So I've got my equipment. Again, I'm picking up the unadjusted balances, not the adjusted balances. Now be careful, I've got accumulated depreciation. You'll notice it's on the credit side. And then we pick up our liabilities. They all have normal credit balances. This is stock. I don't have, by the way, the notes payable and the interest payable because we paid them off. Got retained earnings. And our revenues, they go up because you give goods or services. Expenses are all normal debit balances. They make shareholders' equity go down. Interest expense. And lastly, dividends, all debit balances. Now that's not going to have an adjusting entry, so I just called it adjusted balance. So those are the balances, and you can see here my totals. My total debits equal my total credits, which is a good thing. The next thing I'm going to do now is use this, look at every single account and determine whether it needs to be adjusted, and then do adjusting entries. So my next step is to do the adjusting entries, and I've noticed when I looked at the prepaid that we know that our insurance company isn't going to give us $200 because back in June, the prior month, we paid $300 for 3 months worth of service. So we have to reduce our prepaid. We're getting some of the, or having, excuse me, we're recording insurance expense, my bad, getting a service, and it's equal to $100. And what we're crediting, giving up, is the asset, because the using of an asset is an expense. So if you will, I'm going to now post this, and you want to be careful because you post your adjusting entries right here. So I'm going to do the credit first because I'm right here. So you can see it's making my balance go down as it should. I use some of that prepaid insurance, and then I'm going to debit the insurance expense. The next is the depreciation, and you have to look back at it's the depreciation is at a rate of $15 per month. I'm going to debit depreciation expense. The using of an asset is an expense. Oops. And I'm going to credit accumulated depreciation, not the equipment, though this accumulated depreciation is going to get netted with the equipment account when I go to do my balance sheet, and that was $15. So I'm going to, this again is my adjusting entry, so I'm going to put it after the unadjusted balance. And let's go get our debit over here. And the last one we have is we owe $500 for wages. You record the expense in the period you got the service, even though you're not paying. Instead, what we're doing is giving an IOU, wages payable. And we'll post that. And then after doing, that, we're going to do another trial balance. That trial, the second trial balance, is called an adjusted trial balance, and then we can do our financials. But let me go ahead and finish posting my wages expense, debit wages expense, making shareholders equity go down, and credit wages payable for this month's service that we owe. All right, now I'm going to do the adjusted trial balance, and I'm going to pick up all these ending balances now. And when we finish doing that, this should equal, and from this column you'll do your financial statements, which I'll do in a separate video.